Welcome back, investors. Jake here. Obviously, there's a lot of breaking news in the US stock market given Russia's invasion of Ukraine. And in this video, let's check in with the markets because I want to show you the technicals how potentially this recent drop was predictable. At the moment I'm filming this video, all of the indexes are green. The S&P is up 0.36. However, this drop that we saw yesterday, guys, on Monday, the S&P was down 2.95% or almost 3%. Now, I want to give you guys a tip here that when there are tumultuous world events happening, potentially we will see these large drops on Monday. The reason why is because investors are watching corporate news all weekend, hearing all of these scary stories of what's going on in the world. The markets open up on Monday. Lots of people just say, sell everything, I'll buy back in when things calm down. And when we go year to date, the S&P is down 11%. I think the NASDAQ now is in a bear market, down greater than 20%. However, my Schwab account is only down 9%. So the S&P is down 11, I'm only down 9. I technically am beating the index funds. So that's a positive, I guess. And I want to show you guys the technicals. If you've been following my channel for a while, we've been checking in with the chart for the S&P, every couple weeks. And once we left this channel uptrend that we had been locked in for almost 18 months, we've entered a new one now. I feel like we have enough points of contact where we can confidently say the market peaked on January 4th. This was the highest high. We're creating a lower high, potentially another lower high, and it's just going to go down until the market finds support at new levels. What will those be? That's what I want to talk about in this video. But first, let's just go through some crazy headlines happening with the world supply chain, the world economy, everything that's going on. And the first one is that Russia's oligarchs, their billionaire class, they've combined lost about $80 billion in wealth because of the sanctions that the West is putting on them. What does this mean for the markets? Well, I think a lot of investors are trying to figure out where are these guys' money located, because everyone's paranoid that potentially some of their holdings could be margin called. If they lack liquidity, if they're losing money, they might have to sell certain positions, forced sales by banks. Think about Archegos early last year with Discovery stock and what was the other one? Viacom. The price of oil hit a 14-year high as the U.S. weighs a Russian oil embargo. This article is actually from 12 hours ago, and while getting this video ready, this news broke that yes, the US is set to ban all Russian energy imports. This is mostly symbolic because the United States is energy independent. Obviously, with global supply chains, we bought maybe 6 or 7%, but we didn't really need to. And yeah, this would have more impact if more countries were to participate, particularly Europe. Potentially, as this crisis in Ukraine gets worse, Europe might take that step. And all these companies have to adjust to the surging price of oil. This is affecting the airline stocks, the travel stocks. Everybody who gave their quarterly guidance about, how much this would cost and how much this would cost, all that's out the window. So when all these companies are going to be giving their earnings reports coming up in a month or two, yeah, it's everyone's projections are going to be off. Boeing might have a Russian titanium problem. Obviously, Russia is a huge, vast land of natural resources like copper, aluminum, palladium, gold, titanium. And if we start embargoing or sanctioning all of these industries, once again, this affects the global supply chain. Nickel prices double to a record of 100,000 a ton. Trading was suspended in London because the price was going crazy. And it's not just energy or commodities. Every corporation that does business in Russia is now in this awkward position of not participating unilaterally. Obviously, I don't think governments will tell McDonald's they can't operate in Russia. But if McDonald's continues to operate in Russia, this becomes a public relations problem. So McDonald's, KFC, and Starbucks face boycott threats for continuing to do business in Russia. Coca-Cola and Pepsi also keep up operations after other American firms have pulled out. Think Disney, Netflix, Adobe, Apple, Samsung, Visa, MasterCard. And once again, while preparing this video, this news broke that McDonald's will temporarily close 850 restaurants in Russia, nearly 2 weeks after Putin invaded Ukraine. So it's on you, Starbucks and KFC, if you guys, once again, want to keep operating in this authoritarian regime, this oppressive country, when even McDonald's now has pulled out. And every company in the world is trying to weigh the cost-benefit analysis of continuing operations, hoping this ends soon. Otherwise, yeah, I think social media will start driving boycotts. People in Western countries, people in the United States will start boycotting Coca-Cola products until they officially suspend operations in Russia. So once again, every company in the S&P 500 is going to be impacted, some more than others. Obviously it's easy for Harley-Davidson to suspend their operations when they weren't really sending that many motorcycles to Russia. Okay, back to the S&P 500. When we look for levels of support and levels of resistance for an index, it's not really as strong as individual stocks because for individual stocks, there are hard buy limit orders and sell limit orders. However, this downtrend now has several points of contact, and everybody trading from the technicals, think computer trading algorithms and whatnot, they all see it. This has all been very strongly identified. You could wiggle this around a little bit, but it's definitely there. So let's actually go ahead and make this line black, and we'll make it skinnier, because once again, this could be broken at any time, but until it's broken, it's still intact. That's kind of a weird thing to say, but this channel is looking very real, guys. So where is the S&P going from here? And I could see it going back down to maybe the levels where it was March of last year. You can see there was kind of a big gap up here between 39.50 and 40.50. Maybe there's a bottom range here at 40.50. So let's go ahead and add a line here at 40.50. Let's see if we can scroll over and just draw this in. And we'll go ahead and make this green, make it a little bit thicker. So what I'm expecting to happen over the next week and a half is that the S&P is going to continue falling. It's going to get through this previous low of 41.50 and create a new lower low. Why is there going to be so much selling pressure in the next week and a half? And it's because the Fed is going to meet next Tuesday and Wednesday. They are going to announce their first Fed rate hike. Potentially it could only be 0.25%, but I actually think they need to be more aggressive. I think inflation actually is a huge problem. It's going to get worse given supply chain problems with oil. They need to be more aggressive. And a lot of people with cash in their accounts are just waiting to buy until they know the news. The anticipation scares investors more than the actual event. So that's happening next Tuesday and Wednesday. Then next Friday is the third Friday of the month. Liquidity tends to dry up in anticipation for monthly options contracts expiring. So next week, guys, we got a Monday. Once again, Mondays are scary because people just watch scary news all weekend. Then we got the Fed, and then we got the third Friday. So I am looking to open some new positions and buy once we create this new lower low. Do I think the market will bottom next week? Probably not. How much lower can it go? mean, we're probably gonna test 4,000, 3,900 for the S&P. And if you're an index fund holder, just buy and hold. Don't worry about this. If you pick individual stocks, I mean, it's all bets off. It's a free for all. But the indexes are so heavily weighted towards the mega caps. I think it is worth going through a couple of these because this is where I like making my money buying call contracts. And if you've seen my previous videos talking about Apple, it's very interesting because there's this long-term uptrend slope that's been intact going back all the way until May of 2019. So for over 3 years, this uptrend line has been holding, given this momentary period when there was a sell-off because of COVID. So there are how many points of contact here, guys? 1, 2, 3, 4, 5, 6, and recently 7. This slope has held. So the trading algorithms, the computers, they all know this is here. They all see it. So Apple is once again getting very close to touching this line, touching this slope. And the last time it did it, it rocketed up like 6% in one day. We have, well, as of today, it's intraday, but we have gone through this level of support of 160. I think this slope is going to hold. Apple has lots of good news. This is good news for the market, good news for the indexes. Okay, I am currently in Berkshire Hathaway. This is one of my positions. Similar to Apple, guys, there's this slope line going back all the way to the COVID crash, with 1, 2, 3, 4, 5 points of contact. Looks like Berkshire is trading within this range. However, it hasn't broken the uptrend. This is still an uptrending stock with this slope giving support to the price. Okay, guys, now we have Microsoft, and this uptrend slope has been intact going all the way back to December of 2018. So this slope has been in place for 4 years. And when we look at the chart for Microsoft, it's very apparent that Microsoft got way ahead of itself given this uptrend line that had been in place for years. And Microsoft in the intermediate is in a downtrend. You can see it clearly that it peaked potentially in December, creating lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. However, as soon as it got to this uptrend line that's been in place for 4 years, similar to the other mega caps. I mean, look at this one green candle that occurred on February 24th. Just rocketed up 6% in one day. Microsoft has a market cap of over $2 trillion. This is a huge move. And it's done it again. Huge sell-off, getting back to this line. Potentially, you could extend this another couple weeks before we have a reckoning where it's either going to hold and stay above this slope line, or it's going to come crashing through. This uptrend line is officially dead. Microsoft on people's sell limit orders triggering would probably go all the way down to 240. Finally, I want to talk about Google because I love Google. And similar to Microsoft, got way ahead of itself, people buying it up. However, there is an uptrend line going all the way back to March of 2020 because of COVID. 1 point of contact, 2 point of contact, and here it is, guys. It did it again, where as soon as it touched the line, and I think this happened once again on the 24th of February, this uptrend slope line held, and it's doing it again. You can see it touched it, shot up, pulled back, sold off. It's now touching it again. So this is an excellent place to buy these mega cap stocks if you believe this uptrend line will hold, in the short term. But of all these positions, I really like Google the best, given their stock split coming up in June. I think their valuation is great. Their prospects are great. I don't think they're as affected by global commodity prices or global supply chain issues. So this is looking pretty good. I'm tempted to basically buy some more call options or debit spread options on Google, but we got to get through next week. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.